What is up, everybody? Logan here again today with another video coming right at you guys. And we did a zero DTE today. Back on that little zero DTE grind. We were in the one DTEs for a little bit, but today actually had a really nice setup. And we did gap down. If we go over to SPX stock, we had that gap down right in the morning, right? Not anything too crazy, like 15 points, but overall, still an open gap. So that's going to fill at some point. Most likely, there's like a 98% chance that does fill. It could be tomorrow, right? OPEX, a lot of volatility. Just overall options expiration days are a little tough to trade, but we did really good today on the zero DT. We'll go over to the trade right now. If you go over to the zero DT pumping iron, I chose the 3870, 3865 today. It's close to the 2x the EM low, and it protects us from a 1.5% day, which you're good 85% of the time just from an odd standpoint on that. So overall, I knew that, this trade's going to work out 4 out of 5 times, pretty much 85 out of 100, but just from a probability standpoint. But we had 3,900 and 3,880 as our levels. And I kept mentioning all day in the main options chat, hey, 3,900 is our magnet today. And exactly what did the market do? 3,900, right? We would get 10 points away from it, we'd zip back towards it, we'd get 10 to 20 points above it, and at the end of the day, we'd zip back towards it. So the market moves in psychological levels, and 3,900 is a big support zone. If we do lose 3,880, though, we could slide down to about 3,825 would be my next target. So I was watching to see, hey, if we hit 3,880, I'm going to start looking at potentially managing this trade. But overall, we got 40 credit on it. A lot of people did end up getting 50. I think it got as high as 70 or 75 cents at one point because we put it on this morning, and then the market decided to drop like 10 points. And then even when it was dropping around here, the premium really wasn't that much like crazier, right? Because your volatility will shrink as the day goes on unless you're like dramatically moving down or if the VIX is like dramatically skyrocketing. And if we look at the VIX today, right, we were up to, 2169 at the highest, and then fell all the way back down to right around this 20 level, bounced again. So that's one thing. 20 is a big VIX level, 25, 30, and 35. And I mentioned that. And if you look at the last 6 months, look at how the market treats these levels, right? 30, boom, hovers, drops down, goes up towards 35, drops down, all the way down to here, bounce at 20, go back down, come back under 20, bounces back towards it. So it's just really, really respectable, these levels are for it. So the VIX has been interesting. It's still slowly increasing, coiling up towards the end of the day. So overall, OPEX is going to be volatile, though. But that was the trade from today, and we did let that expire just because we got that nice afternoon move. But this was just right off the expected move chart, right? I show it all the time. We took that 3870, so right at this 1.5% down mark, 85% out of the money right there. So overall, just a really nice spot to be. And, the minimum credit is for if you're just taking a trade and playing strictly probability, right? Like if you don't have a management strategy and it's either let this go to expiration, no matter what, right? For winners and losers, like you would take a max loss. That's the minimum credit you would need if you played it that way to be profitable. But yeah, overall, just a smaller EM. We saw a big drop yesterday, but we also knew that 3,900 would be pretty stable overall. So expected move math had that gap up, right? That gap down. Told you guys about that. Nothing too crazy, 15 points. Where's the VIX? And I showed you guys we're right above 20 right now. So if we continue to creep up towards 25, you'll see more legging down. But we might break back underneath 20 and we might get that rocket back to 4,000. Like I said, I don't try to predict price. I just take the psychological numbers. I take support. I just watch the levels and I react to it based on what I'm seeing. We did exceed the EM yesterday. So that's something to keep in mind. And I expected us to exceed it again today, but we didn't. We actually stayed within it by a couple points. We did exceed it again, but we didn't close outside of it. But yeah, where are our levels? And, there's a lot of places you can track this to see where your support zones are, but just track overall with your strategy what you're looking at, right? And that comes from price action standpoint. You got to see where these algorithms are buying and selling stuff, and then also knowing your psychological numbers, your points of control in the market, your pivot points. That's a good way for you to determine where your levels are. And position sizing, like I said, 5%, 6% of your port is a really good spot to position for these trades. So if you have to start to manage, because if you're really going to sit there and be in like really deep shit with some of your trades where you're 100 points in the money, being able to size properly, like makes your decision making and what to do from there very, very helpful. And it just comes down to trade timing too. Like yesterday, the put credits were a painful thing, but today it provided opportunity, right? Just by not being in a put credit when the market falls or anything bullish. When the market moves at 100 points, over 2 days, and we get down to the 3,900 zone to take a put credit again and get a little bit more bullish in the short term, and we're completely out of the position now. So I am free, like position free. I'm completely neutral on what the market does from here. But overall, right, like having that proper sizing and being smart with your trade timing allows you to be more maneuverable. And like that's the one thing, because I do a lot of mean reversion trading where it's like if you're gonna sit and watch the market overall, you have to wait for it to get really, really far extended in one way before it reverts to the mean. Because if the market always stayed at its mean or its average or any statistic, you would never have an edge, right? Like that's why a lot of things that are probability based are very difficult to have a really good edge at. You could look at sports betting, for example. If the same guy who averages 30 points a night in basketball scored 30 every single night, you would never have an edge on if you would bet him to go over or under, right? Unless you're taking like alternates or something. But it would just make it very different. So it's always nice when you can find in the markets some sort of average to revert back to, and that could be moving averages, right? So choosing strikes, I showed you guys why I chose those today. I just wanted that 1.5% mark right there. And then also in general, I just wanted to make sure we had a really nice distance from that 38.30. I could have put us right at 38.30 because that is the last leg of support. But the market does like to drift past certain levels by a couple points and then just rip back the other direction. So overall, that like helps your decision making and having a really strong month. And I think this month has been one of my more favorite months to trade in comparison to December. And it just feels good to be back on the right side of the trade more often than not. So that's a nice thing. Risk management, like I said, we roll if we're getting into the money. Or very close to in the money, we roll into the next day. We take a look at the overall trend, and then we can also get into widening some contracts. But just keeping your expectations, like I said, my goal for this year is to just keep myself as humble as possible, especially when the market's moving like the way it is, right? Over here on SPX, we didn't technically fill that gap all the way. There's a good shot we could do that tomorrow. But OPEX is historically red. It's historically, moves to the downside as options expire. But OPEX happens every third week of the month on a Friday. So just being aware of that, right? And overall, like the economy is still in a really weird catch-22. So volatility should continue for a while. And I kind of like this though. It really makes trading more fun because you're mentally clear positions by the end of the day. I almost took a 1 DTE, but knowing that about the OPEX, I was like, oh yeah, I probably don't want to put risk on. And Netflix is announcing earnings as well. So a lot of stuff going on there. But yeah, just want to touch on that with this trade. We had a really nice trade today. If you guys would like to come trade with us, the link is below in the description. Do I plan on trading tomorrow? That's a great question. With it being OPEX, I might trade. But overall, I'm just going to see if there's a setup. I still like that 3,900, 3880 level. So maybe we hop down towards 3880 in the morning and I can put something on way down at 3850, maybe lower if I can get it. But overall, it looks like there's a little short-term bullish development, but it is OPEX day where historically there's more red than green. So, you're kind of in another catch-22 spot where there's a lot of uncertainty going into tomorrow. So I figured we'll just wait to see if we get a 0DT setup. But that's going to be everything for me in this video. If you guys could leave a like, a comment, and subscribe, I'd really appreciate it. That's going to be everything, and I will see you guys in the next one.